Welcome to County Portal, your simple source for local government services and public records. Let's get started.
How much federal tax do you actually pay on an $80,000 income? The answer is almost never a simple percentage, because the US has a progressive tax system, and your final tax bill depends on several key factors. So, let's break it down. The single biggest mistake people make is thinking that if they are in the 22% tax bracket, they pay 22% on their entire $80,000. That's not how it works. Instead, your income is divided into portions, and each portion is taxed at a different, increasing rate. Think of it like filling buckets. Everyone, regardless of their total income, pays the lowest rate on their first chunk of income, then the next rate on the next chunk, and so on. The main factors that change your tax bill are your filing status, your deductions, and any credits you qualify for. Let's walk through a common example to make this real. Imagine you are a single filer with no children, and you're taking the standard deduction. For the 2023 tax year, the standard deduction for a single person is $13,850. This is a crucial number. You don't pay tax on your full $80,000 salary. First, you subtract your deduction. So, $80,000 minus $13,850 leaves you with a taxable income of $66,150. This is the number we apply the tax brackets to. Now, let's fill the buckets using the 2023 single filer brackets. The first $11,000 of your taxable income is taxed at 10%, which is $1,100. The next portion, from $11,001 up to $44,725, is taxed at 12%. That's a tax of $4,047 on that chunk of your income. Finally, the rest of your taxable income, which is the amount from $44,726 up to your $66,150, falls into the 22% bracket. That portion is taxed at 22%, which comes out to about $4,713. When you add it all up, $100 plus $4,047 plus $4,713, your total federal income tax bill for the year is approximately $9,860. This is your tax liability before any credits. Notice that your effective tax rate, which is your total tax divided by your gross income, is only about 12.3%, not 22%. Now, this number can change dramatically. If you were married filing jointly, your standard deduction would be much larger and the tax brackets would be wider, resulting in a lower tax bill. If you had children, you could qualify for the child tax credit, which reduces your tax bill dollar for dollar. If you contributed to a traditional 401k or an HSA, that would reduce your taxable income even before the standard deduction, lowering your tax bill further. So, while our single filer example paid around $9,860, your personal situation could lead to a very different number. The key takeaways are that you aren't taxed on your full salary, our tax system is marginal, and your final bill is unique to your life circumstances. Thanks so much for watching. I hope this cleared up how federal income tax is calculated on an $80,000 salary. If you found this video helpful and want more simple explanations for complex financial topics, please hit the like button and be sure to subscribe to the channel. It really helps us out. See you in the next video.